Right, hello everybody. Welcome to today's podcast. This is Adrian speaking. It's the 27th of July 2020, and this is the Trend Signal podcast, how to trade Forex and stock markets. And at the moment, we're seeing big moves on gold as it's rallying to new highs. We're seeing stocks coming off this week, and we're seeing the dollar falling as well. So usually those two going opposite directions, but not last week. So there's certain reasons why, and we're going to be talking about that in today's podcast. And as ever, I'm joined with our resident expert and chief analyst, Jerry Miller. Hi, Jerry.
Morning. Hi there.
So yeah, quite a bit's been going on really over the last few days. Jerry, why don't you kick us off, please? What on earth's been happening?
Well, gold's the big highlight. Certainly the headlines this morning and on Friday as well. We spoke about it this time last week in our podcast about that 1810 level. It's sort of been banging into it, and well, just the idea obviously being that when it breaches it, you'll see it sort of rally significantly. And the reason why, it's not because we had a particular bullish view on gold, but when the market reaches an all-time high, and 1810 wasn't though, but it's very much in clear air, and you have to go back a long way to see gold at these levels. You're talking about 2011, and now we breached the 2011 highs. There's nothing for anyone to sort of attach their sort of charts to, as it were. So when we're making new highs, that you've just got psychological numbers to aim at, sort of 1950 and obviously 2000 a psychological number, and it just looks like it could get there tomorrow or today.
Yeah, it does a bit, doesn't it? And that 1810 level, we sort of banged into it about 6 or 7 days in a row almost, and so closure just above that level would have really seen a bit of a breakout, and that's really what's happened. So why is gold rising though, Jerry? Do you want to just explain that to our listeners?
Yeah, it's quite an interesting argument going on. Normally you would say that gold is a safe haven play. But when you look at equities and you're thinking, well, hang on a second, equities, I mean, I know they fell on Thursday and Friday, but generally they're pretty high, pretty solid. And that's what we refer to as risk on, where people are putting their money to work. They're not thinking about how they can protect it and put it in some sort of safe haven like gold. But actually, gold also reflects a certain sort of level of global angst. So what it's doing is it's looking at sort of global macro events that's causing a bit of concern, and I think certainly gold traders have been focusing on the rising tensions between the US and China. Do you remember last week, at the end of last week, the US announced the closure of the Chinese consulate in Houston, and that's because of allegations of some skullduggery, etc. But then China announced over the weekend, in a bit of a sort of tit-for-tat move, the closure of the US consulate in I think it's pronounced Chengdu, and it's just simmering. It's just carrying on and on and on, and after a while, a lot of other countries are starting to be a little bit concerned about China and its sort of ways of doing business, and cornering certain markets, strategic markets. And I think with the pandemic, there is this concern that countries have to be able to cope for themselves and not rely on global marketplace. There's a certain amount of sort of looking inwards now, and I'm not suggesting the UK or Europe are following any sort of isolationist policy, but it's for purely practical reasons. We've got to be a little bit careful, haven't we? So certainly global angst, certainly that sort of has been a big driver. But the dollar, look at the dollar.
There's been some amazing moves there. Yeah, absolutely. Not just gold, but the euro and everything, hasn't it? It's been really moving.
Yeah. Well, certainly the euro against the dollar, even sterling against the dollar. Poor old lowly sterling, that's keeping pretty good track of the euro against the dollar. So the dollar is losing ground significantly now, Adrian. And we talked about it last week. There's been a sort of an acceleration in the trend. Last week, just haven't got my notes here, we lost, or I say the euro gained, or the dollar lost 2.29 cents against the euro. That's a big move. That's 2% in a week. And I know 2%, people think 2%, what's that? That's nothing. Look at gold, look at crude oil sometimes, look at indices. But in currencies, that's a big move. Sterling over 2 cents, $2.28.
Yeah,
Sorry, 2 cents, 2.2 cents. I apologize. That's 1.8%. That's a big move. And so
absolutely.
remember, commodities priced in dollars. When the dollar weakens, it's cheaper in euros, cheaper in sterling. So investors then buy gold, and that's why what pushes the price of gold up when the dollar weakens.
It's all correlated, isn't it?
Yep, pretty much. But it is confusing for some people. When you look at
Mm.
gold and equities and think, well, hang on, one's safe haven and one's like putting risk on, and they're both going up. So how's that
Yeah,
happening?
it's a touch more nuanced than that, isn't it? That's for sure.
Yeah, yeah.
And actually, I think that's one of the reasons why these podcasts are so beneficial, because we can start to, listeners can start to understand some of those nuances rather than that blanket approach to, oh, stocks rising, dollar falling, and so whatever so it may be.
Yeah. Well, certainly it's a little bit confusing to some people why gold is so strong. Gold is one of those instruments that, I mean, I think actually a bit like equities, this is all liquidity driven, of course. When I talk about liquidity driven, I'm talking about the measures that the Federal Reserve, the US central bank, has engaged in, and, and the US government. They pumped in trillions of dollars into the US economy. And that
Mm.
liquidity has driven all markets higher. Commodities, indices, bonds, it's just that's the way it works. And you can understand. Go on.
I was going to say, and there's talk of the stimulus, a further stimulus package, but the bill collapsing in the
Well,
states,
there
isn't
you
it? I
go.
mean,
And
that's
that's
having.
exactly what I was going to refer to. You're quite right. So Thursday, Friday, actually, the markets in the US, when you look at those markets, you can see those two candles on Thursday, Friday. Not good days, but that was
Mm.
because it was the Republican congressman negotiating with the White House over this rescue, or it's really this. It's called the stimulus bill, and it basically the first bill, the current terms, they expire at the end of July, which is the end of this week, Adrian. So they need
Mm.
to renew them. And I think there were concerns over unemployment benefits or something. Anyway, they're proposing a new bill today, um, and that includes $1,200 per person in direct cash payments.
I find
1200.
that a weird thing to do, though, is to send people.
Well, it's helicopter money, isn't it? If you want to
Yeah,
get people spending, give them free money.
yeah, yeah. Free money. Yeah.
Well, no. It looks like free
It
money.
ain't, it ain't free.
It ain't free. It's probably going to cost you more than 1,200 in the end, but spend it. Um,
I,
and
I
then
always find it fascinating just how close to the wire these things come, where you're in a position where it's all going to finish on, what was it, Friday,
mm,
the stimulus, and yet here we are, only a couple of days before there talking about, the biggest economy in the world, and I might have a massive, massive banana skin if they don't sort this out. And
I,
it's a bit frightening in a way. I don't know if you remember I heard the term fiscal cliff again today, which probably hadn't heard. Remember the fiscal standoff? I don't know, it's probably 3 or 4, 5 years ago,
mm,
where we didn't get non-farm payroll data that particular month. I think it was
mm,
October. I don't know, probably 2015 or something,
mm.
because there was no money to pay the staff to actually collate the data in the first place.
Well, that's because the Congress didn't pass a rise in the debt
Oh,
ceiling. So
absolutely.
basically,
But
they had to furlough all of the government employees whilst they waited for more money. I mean, it's weird, isn't it? It's like a third world problem for the strongest economy in the world, the biggest economy in the world.
yeah, absolutely, it's frightening. A very delicate, isn't it? At times, you
Yeah.
wonder.
Yeah.
Um,
So
okay,
that's
anything else
gold.
to cover off on before we talk about the main movers?
That's pretty much it, really. Yeah, that's pretty much it.
Yeah. Okay. So just before we talk about the main movers, I do want to just quickly reference we've got a few events coming up this week. So if you like the podcast and you want to hear more about Trend Signal as an educator and how we teach traders, home traders, to trade more effectively, we've got 3 live events going on this week, and you'd be absolutely welcome to book a free place at one of these events, and we'll teach you one of our favorite trading strategies. It's called the Sniper Strategy. We can apply it to FX, indices, and commodities. We can trade from just 20 minutes a day using very 3 very simple rules to identify fantastic turning points in the market. And if you'd like to learn those 3 simple rules, please come along to one of those events. Now, if you're watching us on YouTube or on our website, you can see the link on screen, but I'll read it out for those listening to us, bit.ly/learnts. So bit.ly/learnts. Get yourself booked in for one of our free events this week, and we'll teach you one of our favorite trading strategies to help you to take on these markets. But Jerry, let's just go back a little bit, and let's just talk about the sort of the review of last week. You know, what were the movers, what were the shakers? So stocks, you mentioned, were down a bit last week.
Yeah, they were. Well, it's really not much though. I mean, the market that suffered the most was probably the FTSE. In fact, it's interesting. You know, people say, you know, Brexit, the UK economy has been hit the hardest, and actually, to a certain extent, it has done. The sort of reliance on the service industry. We're very much a consumer-driven economy, and so with the sort of collapse in consumer spending, it's been quite a hard road. But the FTSE, yeah, down 2.6%. That's about 160 odd points.
Yeah.
And the 250, as I said, that's also been underperforming. When you look at the likes of the DAX and the Euro and well, the general Euro stocks hasn't done as well as the DAX, but the DAX is a smaller index. It's only 30 stocks. That's from Germany. But yeah, not a great return. And the main reason, probably, sterling strength, Adrian. Look at sterling.
Well, sterling strength, but what you've also got there, Jerry, I guess, is the makeup of the larger constituents. There's more sort of traditional businesses, I guess, within the FTSE, whereas a lot of the companies that are driving the market higher are the tech companies that we don't have so many of.
No, we don't. Well, there's a vibrant tech sort of community in the southeast of England and in the UK generally, but they're not listed companies. A lot of new companies that end up being acquired by big US tech. But you're right, we don't really. We've got a lot of resource companies, banks. You know, we got the banks reporting this week. They've not had a great time of it. There's going to be some bad debts, impairments they're going to have to announce. So generally, that sort of side of things underperformed. Of course, we know what happened with oils, with the collapse in the oil price. So yeah, there's a lot of good reasons, explicable reasons, as it were, as to why the FTSE hasn't performed. But yeah, so that was probably the worst performer. The Dow, 202 points, down 0.75%. S&P slightly better, down only 9 points. That's about 0.25%. The DAX in Germany, the top 30 stocks, they're down 81 points. A very modest move for the DAX, which can be very volatile. That's just 0.6%. And the Nikkei actually was up on the week, so a modest 55 points. But generally, data was okay
I guess if you think about it, the Nikkei is sort of playing catch up to a certain extent. So if a lot of the move happens in the States on a Friday night, well, the Nikkei is well shut by then, isn't it? So it's kind of a bit of a time lag on that, isn't it?
And we also had a holiday in Japan on Friday, which meant that it and Thursday and Friday, so they missed out on
Thursday as well, wasn't it?
Yeah, that's right.
Okay, so just quickly, because we've only got another couple of minutes, Jerry. So currencies, they're moving a lot over the US-China tensions and also this stimulus bill. We've also got FOMC later this week, which will be fascinating. I know that that's something we're going to be talking about when we review the events for the week ahead in that podcast there. So stay tuned. If you want to listen to our other podcast on our channel, then please do listen into that, because we'll be talking about the main events coming up, and there's certainly a big one later on this week. Otherwise, let's just finish off with oil. Probably not a lot to say really, but pretty much just waiting on just following stocks, and a little bit sort of boring at the moment, isn't it? After the crazy months of the last few months.
I think it's sort of, it looks like it's ready to slide back down again, in my opinion. But it depends. You know, you could see a resurgent equity market again. It's done it several times over the last 2 months, Adrian. So, but I just got a feeling that the lockdown, they need lockdown measures in the southern states in the US, the likes of California, Arizona, Texas, now Tennessee, Florida. Gosh, you know, I think that's going to start to impact some of the numbers going forward. So, you know, it's waiting for a decisive move in equities, but I think equities, you know, once we know more about the FANGs later this week, I think the likelihood it's probably more likely to fall than rise. But gosh, we've been proved wrong so many times, Adrian.
Haven't we just? Haven't we just? Okay, well, I think that's pretty much it from us. So thanks very much for listening, everybody. Remember, we'll be here this time next week, and we'll recap on what's been happening. But also, we'll be doing another podcast today, which will be launching, talking about the events for the week ahead. So talking about the main economic data, any main speakers, any main corporate events that are going on that are likely to have big impact on the stock and Forex markets. And remember, it is these events that we know when they're coming up, these are the main drivers for movement. So it's always a good idea for anyone's trading plan to be aware of what those events are, and that's what the other podcast will be going through. So otherwise, everybody, thanks very much for listening, and have a great week's trading. Bye-bye for now.